In today's video, we'll look through the crypto market as well as the stock market. When looking at the crypto market, we can see that the chain has been doing quite well. BNB and Solana are major winners, as are Matic, Atom, and Ton. And what about the rest of them? The memes are coming up a little bit. DeFi is not doing too badly. Blockchain services are suffering. Blockchain infrastructure, Link not doing too well. GameFi just coming up a little bit. Could be one to watch. We'll look into the structural levels on especially Bitcoin, but some of the other Tier 1, Tier 2, and Tier 3 charts. BNB and Solana have been surging. Congratulations. And when BNB starts to rocket, it typically represents that money is flowing into the crypto space, because BNB is the exchange token for fee reduction on the largest crypto exchange in the world. Have a quick look at Ethereum's price over the past 24 hours. We can see it's up literally 0.6%, and this is quite interesting considering what's happening with Ethereum. Ethereum's Decon upgrade is all about lowering the costs on level 2 solutions, scaling solutions, which makes Ethereum more attractive overall. A surge in BNB recently has pointed towards the crypto market going up parabolically, so just keep this one in mind. And we can already see that Bitcoin is doing quite well. It's about 7% away from our monthly target. The greatest gainers across the past 24 hours. Dog Whiff Hat is doing quite well. And what the heck is Dog Whiff Hat? Let's have a look. What is Dog Whiff Hat? Or Whiff? It is literally a Solana meme coin. As a meme coin, it's literally just a meme. It's just nothing. But yeah, welcome to crypto. Inside crypto, these kind of things can do very well. But what are the technical details of Whiff or Dog Whiff Hat? Whiff isn't just a cryptocurrency, it's a symbol of progress. Now we got it. And progress is Whiff's middle name at the moment, up literally 28% in the past 24 hours. Congratulations, see, dogs are loved by the crypto community. But not only dogs are loved, frogs are loved as well, and Peppy, another meme coin, is up a little over 10%. What about this thing called Cake? Is that a cake baking meme? Let's look. Cake is a DEX. What the heck is a DEX? It's a decentralized exchange. DEXs are alternatives to centralized exchanges. They are decentralized exchanges. And you can just connect your wallet and trade, earn, and own crypto all in one multi-chain DEX. Cake's pretty cool. Let's look into the cryptos that have the greatest percent loss in the past 24 hours. And we can see leading the pack is Injective, followed by TIA, Celestia, and then Immutable X, WorldCoin Synthetics, 1000 Sats, AVAX, AGIX, and Fetch.ai. It's looking like the AI sector is retracing. Just a quick update, the Bitcoin halving is a mere 38 days away. What is the halving really? When the Bitcoin halving comes around, what we see is the miners who secure the cryptography on the blockchain for Bitcoin, their costs double. As Bitcoin rewards are cut in half. Well, you could think about it this way. If you're a Bitcoin miner, your costs and infrastructure costs are about to double. That means if you're not very profitable as a Bitcoin miner, you're going to get smashed and you may actually go under and be forced to sell your Bitcoin. A lot of people approach the halving as a fantastic event, but it's not that fantastic if you're a miner. In this video, we're going to talk a little bit more about a fantastic rule, which is Rule 133. Combine the strengths of an investor and a trader. This is what you should be doing inside a bull market. The investor side is to hold on for dear life, but the trader side is to identify what projects people are going to take to the moon. But it's not just about that. It's about enhancing your timing. As a trader, we know that price is always moving in a wave. It's always going up and down, even in a bull run. A bull run is just a literal parabolic price takeoff We're not there yet. We're getting close to that takeoff. It may seem that we've already taken off, but we've not done so yet. An investor will hear news like this and say, I'm going all in and more right now. Traders are a little bit different. They say, I'm going to get used to the price psychology of what I want to invest in, and I'm going to get in when price pulls backwards so that I'm consistently lowering my average buy price on the way up. And traders can invest as well. And how do you do that? By identifying a good project and then making sure you're dollar cost averaging in the way up. And that is a fantastic thing to do for your profitability. What typically happens, investors tend to buy when all the green is in the market, and when it goes red, they tend to sell. You can think of this as a death of 1,000 cuts. Even as an investor, people will say, I'm going to hold forever. But those kind of true investors are very far and wide apart. What typically happens is people gamble and speculate. As they see price going up and up and up, they say, oh, this can't lose, this can't lose. So they go all in, especially under leverage. And then when the price comes back, they get liquidated. As SXX said from yesterday's video, 90% of leverage traders think they are more expert, and unfortunately they actually are. And the institutions relieve them of several $100 million every day in return. This is very important to consider. In the past 24 hours, $213 million of total liquidations has occurred. These were leverage traders going long, expecting the price to go up, and going short, expecting the price to come down. And both sides got absolutely whacked. Hundreds of millions of dollars. Literally gone in the blink of an eye. You've got to be very careful. If you're leverage trading, you're trading that way because you want to make a lot of money very quickly. It's also very possible that you're letting your emotions control you and your buying and selling decisions. Because when the markets go green, what do people do? Yeah, they run in, and when they go red, they run away. So the key, whether an investor or a trader, do not let the market control your emotions, because if the market controls your emotions, you'll be buying on the way up, especially under leverage, and you'll be getting rid of that. You'll be buying long at spot or under leverage, and you'll be selling, suffering the death of 1,000 cuts. Traders do it very differently. They actually buy at spot on the way down, and they trade the upticks. This takes enormous skill, but it's worth it, because if you're an investor with trading capability, wow, you have a superpower. And you have a lot of knowledge as well, and that's what you need. We often talk about borsogging, or buying on red and selling on green. That is a very profitable strategy too. When you reach the professional levels, you look at the market completely differently. Here we're looking at crypto fear and greed over time. When the fear is inside the market, these are perfect buying opportunities. And if people were buying on the way down, they've been doing very, very well recently. You can see that the fear and greed index just simply is another measure of price. Things have been going quite well for the crypto space. Of course, we've got massive ETF inflows. What you can notice on this chart is pretty important. There was a lot of extreme greed entering the market, and extreme greed is valued at above 80. When we see this, it often means the markets are really overheated and retail is flooding in. When that occurs, we expect a retracement, and that retracement will get rid of retail. In other words, don't be retail, be professional. And how do you get professional? It's simply knowledge and emotional control. The emotional control comes from having 3 simultaneous strategies: a down strategy, a neutral strategy, and an up strategy. When people enter a specific position, they don't think about price going against them. They only think about price going for them. That's why we see so many liquidations on the long side and the short side. But here, inside our global family, we are completely different. We have 3 simultaneous strategies playing out at all times. We know what we'll do with our entire portfolio if the price moves against us, if it does nothing, or it goes for us. It does take time before you should take on any leverage. If you're taking on leverage, especially high amounts and high degrees of leverage, you'll probably wipe out your entire account before you ever have a chance to make any real profit. You will not be consistently profitable without knowledge. I'd like to make a call out to 2 very special, beloved global family members, John and Jen. John and Jen have been doing their 3-dimensional risk management codes forever, and you guys are awesome. Recently, Bitcoin achieved a historic landmark. It bypassed silver in terms of total market capitalization. You can see silver down here at 1.42 trillion. Bitcoin is worth $1.438 trillion. Congratulations, Bitcoin. And Bitcoin is coming for Peter Schiff. Oh no, not Peter Schiff. It's coming for gold. Michael Saylor said something really interesting on an interview recently. He said, when you're on an aircraft and you get to the customs area, if you've got $100,000 in cash and you say, oh, I've got $100,000 packed in my briefcase here or in my carry-on, what does the airport do? It immediately says, oh, you're a criminal, you're a money launderer. I'm going to seize that money and I'm going to get a staff party put together because you're never getting it back. What about if you had $100,000 worth of gold and you were trying to smuggle it through the airport check-in area? Well, that would be confiscated too. But if you had $100,000 of Bitcoin, you can do it easily. It just resides on your phone, or in the cloud, or on your desktop, but it's easy to take with you anywhere. And for these reasons, Bitcoin is going to go up and up and up in value. Bitcoin is superior to commodities. It's superior to that dirty fiat money. Fiat means false or fake. Another difference between traders and investors, especially professional traders, they don't pay too much attention to on-chain statistics and narrative stories that are everywhere. They make sure that they understand what's actually occurring inside the structural levels of the chart. I'll give you an illustration. Bitcoin inflows to exchanges. Inflows to exchanges fluctuate with changes in market sentiment. For instance, an increase in inflows suggests selling pressure inside the market. You can see this all the time on social media. People say, oh no, Bitcoin is flowing into exchanges, sell everything, sell, sell, sell. But the key is not just the inflows, it's the outflows and the net overall position. And imagine this, if there's some whale out there and they're a professional and they say, oh, all the retail thinks when the Bitcoin on exchanges inflows to exchanges, when it goes up, oh, they're going to sell. I'll take my hundreds of thousands of Bitcoin and throw them towards an exchange to get a discount in the price, and then I'll buy more Bitcoin. Please don't fall for this sucker bet. It literally takes nothing for whales to transfer thousands or tens of thousands of Bitcoin on and off exchanges, especially if it gets them a better price. Traders focus more specifically, and professional investors focus more specifically on structure. So let's get into that. As a professional investor and trader, always look to the cross correlations between charts first. Doing your cheat sheet is very, very important to do. We can see the total crypto market cap is currently $2.664 trillion. Now, what the heck is total crypto market cap? It's actually a chart that combines the market capitalization of every single project in the crypto market. Now, when we look at it like this, we might be tempted to just view inside this window and create structural support levels and structural resistance levels. This would be recent indicative price analysis. People would say, oh, there's a resistance level here, and there's one there, and there's a support level there, and the support level there, and this is resistance. This is not the way to do it. Why, Ken? Why? Everybody does it that way. And the vast majority of people lose money. You need to mark up all of price history, and you need to do it with the most statistically significant methods possible, preferably under Level 1 and Level 2 standard certification. If you do recent indicative price, you will RIP your money, because what you're seeking to do is to guess where the true structural levels are inside the market, and you may be very surprised they may not be anywhere close to what you've done. And if you end up marking up a couple of days worth of data over thousands and thousands of days, you're not getting the full picture. You're not getting anywhere close to it. Please don't do that. That is very destructive to your portfolio. Instead, we look towards structure, and where could that structure actually be? We can see at this $2.685 trillion mark, we've got very substantial structure. Now, this is another really interesting point. When you look at structural support and structural resistance levels, Ken, which is which? Which is a support level and which is a resistance level? A support level is below the price that you're looking at. If you were looking at price down here, they're resistance levels because price is under it. And if you were looking right here, that's a resistance level as price is above it. So just be aware of that. Also, resistance and support levels can have different strengths, and you can see they can hang out and group together. When you get this conglomeration, this congealing of support levels or just structural levels together, it makes them much stronger. It therefore acts as a big safety net to rebound price. That's exactly what we saw recently. In the past 48 hours, we had quite a sell down, but it was selling into structural support, and a lot of them. It's not surprising that it got flung back up to a structural resistance level. We see this all the time in all markets. Ken, are you saying this structural analysis applies to any price chart, even commodities, even major global indices, even things like Apple and Tesla, Nvidia? It sure does. That's why it's so important to learn how to draw it for yourself. It's a lifelong skill and one that will pay very handsome rewards. Now, what does all this mean? It means that we've come up from structural support and a lot of levels up to structural resistance. We would anticipate that we're not going to get through just in one hit because this is a strong structural level and prices already come through quite a few lighter structural levels. It's trying to maintain a degree of support at the current time. But if we start to dip below 2.64 trillion, that may open up these lower support levels. So please be aware of that. And if we get above 2.69 trillion, it could be absolute fireworks. When people are first learning about price structure, and let's have a look at Bitcoin. Bitcoin has been trading in excess of 5,200 days. They may look really random price movements, but they're not random at all. They're always bounding between structural levels. But where are the structural levels on Bitcoin? Let's have a look. We can see that we've literally come up to a structural level at 73,413. We came up to this structural level and we came back and retested 71,784, and we've so far not been able to get above. Now, what is the law with price and structural levels? Professional traders and investors understand this law because it's really, really important, and it tells you where price can go next. If you cannot get above, that means if you get up but you just quickly decay down, you're coming back to the next conglomeration of structural support levels. If you can't get above, where are you going? You're going below. But if you can get above and you reconfirm, you're going to the one that's higher. The next structural resistance level is around that 75,000 mark, 74,900, so just be aware of where it is. If you're doing the cheat sheet, you're going to see some very important moves happening on the US2, the US10, and the DXY. Also, make sure that you're looking at the different Forex pairs. It can give you some incredible insight into what the market can do. Always remember, it's how price reacts to these structural levels that you really want to think. You don't want to be bullish, you don't want to be bearish, you just want to be structural. In yesterday's video, I was talking through the CTKS method parts, and I said Scalana had a lot of positive upside, but Scalana looked like it was going to tank yesterday. But the three-dimensional price path exhibited that if Bitcoin was coming up, we would anticipate Scalana to come up as well. And look at what Scalana has done. It's just like magic. Congratulations to everybody on Scalana who's been doing well. Let's have a quick look at Scalana's structural levels and see why price moved up so quickly. Members of our global CTKS family understand that when we're looking at positive fresh air gaps, that is beautiful to look at. Price can explode upwards because there's no structural overhead resistance above it. Now, we do have structural resistance at this 162 level, but Scalana is trying to get above it. Go Scalana! To mark up the charts with structural levels, you'll require Level 1 Standard Certification and Level 2 Standard Certification. If you simply don't have the time to mark up the charts, you can get the indicators from ctksmethod.org. Please let me know, where do you think Scalana will be going in the next 24 hours? Are you anticipating an up or are you anticipating a down? And as a professional, and of course you're professional, that's why you're here. You want to know how to think professionally and how to act professionally inside the market. What is your down strategy if you were in anything? What is your horizontal strategy? And what is your up strategy? If you think about these issues all the time, especially when things are going for you, that's a really good time to do it. A lot of people say, oh Ken, I've got a positive strategy, I've got a negative strategy, and I've got a neutral strategy, until the price goes against them and they say, what do? I don't know what to do. The key with professional investing and trading, make up your mind before you have to exercise your mind, and then just execute on whatever you come to. For example, when price was going up and up and up like this, you couldn't see into the future to see that price could come back down to this level. So a lot of people could be buying on the way up and not understanding the structural levels that existed inside the market, not knowing where the support was, where the support would capture price and either fling it up or fling it back down. If you have your CTKS structure, which is the world's most powerful smart money buy and sell level detection system, you're ahead of 99% of people. It's vitally important to look across your Tier 1 charts, Tier 2 charts, and Tier 3 charts. Literally vitally important. You must know how the market is moving, and some interesting things are happening on the US 2-year and the US 10 years, so please be aware of this. Also, some stuff is happening on the DXY that you need to be aware of. That's impacting the major indices and the major stocks, so please keep your eyes on those as well. It's also going to be impacting on the commodities, so there's something that you need to watch as well. Literally everything is yield dependent. This takes a very long time to learn, but when you learn it, everything changes. And so far, inside the service, in about 10 days, with the meeting of various price level targets inside the service, we've seen some fairly good profits. And I need to update this because BNB sold again. For example, when a price target is reached, say BNB reached its price target, when it retraces, I keep on fueling those CTKS levels all the way down, and then when it comes back up to a different target, I get rid of them and fuel the descent again and again and again. So this one will need to be updated. It's vital to know where your structural levels are on especially the Tier 1 charts, and especially anything that you're trading and investing in. But you will find the Tier 1 charts are the things that control everything. The Tier 2 and the Tier 3 just confirm what's going on. Please make sure that you keep on doing your cheat sheet. You'll find it's a license to print money. I would like to do a special call out to Robert and his son. Robert reached out a couple of videos ago and said, after being put out of work from an injury in 2021, April 2022, I found out I had cancer. 3 operations and chemo, I'm still here. Well, we're so happy about that, my friend. Battling injury from work and still being a father of 5, I still have duties as a man and a father. Learning from you is a blessing in itself. My son asked how to start investing in December. He's 16. What an awesome, awesome son. So we watch the video every day to learn together. This is just so beautiful. I don't want to teach anything wrong. Having you as a teacher is great. Hopefully soon I will be part of the CTKS family. You are a part, and everybody who is watching, you are a part of the CTKS family, and we're just so happy to have you here. And Robert, well done for all you've been through. And to Robert's son, you're a legend, and you've got a fantastic dad. If you're going through a life pullback at the moment, please know our love and healing thoughts are with you. You'll just become stronger, and life always reveals the right path for you to be on. This is why we have the CTKS Creed. These are daily positive affirmations for abundance, financial success, and happiness. Let's go through this today. It's been a while since we've done it. I know the universe wants me to succeed. When you read this, the I is you, if you know what I mean. Every day I show kindness, integrity, and gratitude. Life is not about what you get, it's about who you become. I know opportunities and life reset daily. Today is different. It's a fresh day. If yesterday was horrible, today is a new day. I am worthy. I go slow to go fast. I start small and scale with buy on red, sell on green. This is the key. Life pullbacks give me the strength for the next life rally. I always like to think life happens for you and not to you. I am dedicated and committed. I win or learn and never blame. Blaming is the worst thing anybody can ever do. Blame creates anger and hostility. But the problem is, it's not about that. Blame creates ignorance. If you blame, you're disempowering yourself. You're being disconnected from your true nature. So that's why we either win or learn. Just think about this. If something is somebody else's fault, you're going to have to go over and change that other person. It's hard enough to change ourselves without changing another that we don't have any control over. So that's why we either win or learn. We are masters of our own destinies. And always remember, solve your problems with positive excellence. It's the only way to go. Thank you for being here, and thank you for sharing this time together. And Kate and I look forward to catching up with you again in the next video. Bye for now.